This one candle reveals everything: bias, momentum, the next move, and more. In this video, I'll show you how to use it so you never trade against the market direction again. This is part of the high probability trading series. Make sure to watch all of the other episodes to build your A+ trades. Let's start. Confluence 6, higher time frame candle bias. So let me start with this. If you have two valid setups based on your trading plan, so let's say prices coming lower, and then you have a valid short setup here, but also a valid long setup here. Which one will you take? So you have a short and a long at the same time. The question here, which one is more valid? Which one is higher probability? Most of the time you want to take the one setup that actually aligns with the higher time frame candle bias, and that's going to be the one most likely aligning with the main direction. Okay, we're going to be discussing what's that higher time frame candle bias, how to use it, and everything about it. You probably have this problem when price goes up. You look for shorts, and then price give a minimal pullback, goes higher, another pullback goes higher, and in all these pullbacks, what you're looking for is shorts instead of long. So if you have this problem, then this video is for you, because you'll be looking for reversal while price keeps continuing higher, and you'll keep losing more and more and more every time. So for every trade you're going shorts when the bias is simply going to the upside, and you're looking for trades on the other direction. How to solve that? Focusing on the higher time frame candle bias. In simple terms, if the higher time frame candle is bullish, and that is the bias now, we're gonna be looking for bullish opportunities, then lower time frame shorts are lower probability. On the other hand, lower time frame longs are higher probability. And if we're looking at higher time frame candle as a bearish one, so the bias is bearish now, lower time frame longs are lower probability. And what we need to focus on is lower time frame shorts that are going to be higher probability when the candle is bullish. So it all depends on the higher time frame candle, and that's where we're going to be looking for the bias to give the direction just out of one candle. We need to apply the time frame alignment from a higher time frame candle to a lower time frame entry, and this is always, the time frame alignment we keep using. So whenever we're using a higher time frame candle or for weekly, I'm going to be looking at 4-hour lower time frame entry, daily to 1 hour, 4-hour to 15-minute, and then if you're on a scalp, you can do 15-minute to 1-minute time frame. So that is the time frame alignment you can use. Now sometimes you can be flexible. You could do daily with 15-minute if you want, but it's not going to be as precise as the hourly. But then you could catch much higher reward to risk. Okay, so that is the difference. Before we continue, I've taken everything I've learned over the past 7 years and put it into one place. It's cool. Inside, you will get the full blueprint to finally make it in trading, including the exact strategy I use every day, the edge model. These are some of the trades I've taken with my members. You are welcome to join if you are ready to make the real change in your trading. Let's continue. Now let's explain everything and put it together. Now we do understand from the previous videos, actually from the opening of the candle, the significance of it. So make sure to watch that one. We understand that there are two ways that price or the candle itself can open, and then we can get the direction out of it. So we use the previous video of the opening of the candle. That's step one. And then what we do is we apply it and we use that bias of the candle on the lower time frame now. So we go from higher time frame candle to lower time frame entry, but we need to follow the bias of the candle. So we need to still apply the concept of the opening of the candle. Now we understand that if price, if we have a candle here, this one is going lower and new candle open here. If we open immediately go into the lower side and fail to displace below this, we might have a reversal. So now what do we have? What is the bias? We have a long bias, okay? Because now the candle is going bullish and we've taken the previous candle low and then we were not able to displace. However, if we're opening here and then going up and we created a high based on structure, we created a high, we go lower, and then at this point, what are we doing here? Probably if it's aligned with the structure, we're going to be keep looking for shorts, and this is the candle bias. More confirmation would be a closure below this, and then looking for continuation. So our higher time frame candle bias is going to be bearish here. Now one simple trick to do here is to apply this indicator. So you're going to go here, ICT higher time frame candles by Fatty. You're going to enable that, and here comes the time frame alignment. So if you are using, for example, 4-hour time frame, then you want to enable the weekly candle. And then if you're using the hourly, then you're going to go with the daily. So let's take, for example, the daily time frame. And this is the number of candles that you can, you want to have on the chart. So I'm going to go with 2 candles or 3 candles. Okay, I want to look for the previous 3 candles, including the current one. So for this one, you're going to go to the current chart here. So this is the chart. I'm going to enable the indicator, and actually I'm going to go to the hourly time frame here because that's the time frame that is lower compared to the higher time frame, which is the daily. So we go from daily to 1 hour. We're going to apply that indicator, and if you can notice here, it's going to show us 3 candles. So this candle is going up, this candle is going up, and this one ended up going lower. Based on this current candle, this is our higher time frame candle, and we're going to be following the bias of this candle. Now you could also do 50-minute. Okay, you could do 50-minute, but now we have more, I would say more noise, but a lot of, you could see this as noise or details in both sides, as long as you know what you're doing. So let's apply 15-minute, for example, to see what you can do. Now, notice what happened at this candle when it closes. So we're going to go back here, and we're going to look for examples on how to follow the bias of the higher time frame candle. And we're going to go a bit on more details. So not just, daily to hourly, we're going to go to daily and 15 minutes. And this is going to be more complex compared to daily and hourly. But we're going to take, the hard approach a bit in order to learn more. You can always stick with the hourly and daily. So let's look at this example. This is euro dollar on the 15-minute time frame, and that's the date. This is Tuesday, October 14th. Now, this is 17 EST, and that's the time where a new daily candle is going to start. So if you notice, this is where the last daily candle is. It's going higher. Now, sometime we're going to have bullish candles and then bearish candles. But in a lot of other times, we're going to have bullish candle closing and then also a continuation, depending on the market structure. So if market structure is also aligned with the daily candle, that's when this concept becomes very powerful. But you always want to look for the continuation of the candle, the higher time frame candle that you have. Not continuation, we could have reversal, but based on how the candle opens. So let's notice, this is where the new candle opens. We're going to notice what happened, and we also compare to the hourly to see what happened. So new candle, if you notice, this is the new candle starting here. So what happened is we print a low, and then we started going higher. Okay, let's notice what happened. So after that, we're ranging here because the daily candle is just starting. So we're doing nothing. We started going lower, but still we're bullish because this candle opened to the upside, or actually close to the upside. Now we're starting to go lower, putting a lower low. Actually, we're still inside that low. Okay, we go lower, and then we started going up here. Now, based on market structure, okay, because what do we have here? We have this strong level being in a support. Okay, so price has been reacting to this level multiple times here. And then what we had is an engulfing candle closing higher. So this indicates strength, and this engulfing candle is reacting of a strong level. It's failing to close below a level. So we have a lot of confluences. And if you have not watched the price behavior analysis video, then you know that based on the triggers, the 3 triggers that we have, it looks like we have all of the 3 triggers here. In this candle, this is the candle that has all of the 3 triggers. Now, if you want to take this one, ask yourself, does this align with the bias of the daily candle or the higher time frame candle that we have? The answer is yes, because we are bullish here. This is the candle that we have now. We printed the low. So we already put a wick on the downside, and now we started to go up. So it looks like this could be a good opportunity to go long. Now, I want to ensure that we displace above the previous day high, which is this one here. And then we can look for the continuation. So if you notice, what happened is we started going up on Asia, and then on London, we continue to the upside. Now, even for people trading the London reversal, if they enter here, it's going to be ending up in a loss. Now, sometime, yes, it's going to work, even if against the direction of the higher time frame candle. But if you notice, it's not going to work. Here, people looking for reversal, most likely failing. At some point, it's going to work only if it's aligned with a strong key level and structure. But you notice this one is aligning with the daily candle. So playing the price action more, At some point we had a bit of a push to the downside, okay, going lower again, but we're still bullish here. We're still bullish on the daily candle. Now if you notice what happened, same thing as happening here. We had a push to the downside. We've taken the London low, okay, we're not displacing below, rejection, and then another candle closing higher. This candle here is aligned with the daily candle, so this one is a better entry to take, better than going short. So this one aligns. When I said in the beginning that if you had a short setup and a long setup, which one you take, you will take the one aligns with the daily, or in this, in general, the higher time frame candle bias. For this one, based or aligned with a daily candle. So if you notice, going up, okay, a bit of a retracement, and then going to the TP, and then continuing higher. Now something happened here. So if we go to 17 exactly, so that's when another daily candle opens and then starts. So here another daily candle is being created. Let's see what happened around that daily level. So if you notice, we did not take the previous candle high, or in this case the previous daily high, so that was not taken. We started going lower, so this push to the downside, no wick to the upside. That means we could have a continuation to the upside. So whenever we have a valid setup to take here, we can. So if you notice, we started going up now just a bit, and then we're closing above. So closure above, going lower. Now mainly here it's a bit risky because I could look for a deeper retracement here. So even if we respect, let's see what happened. Price goes lower, and then this candle here is what we always enter based on. Okay, so this is a strong candle, taken doing a fake out into a key level. So if you notice, it's a key level with an imbalance, and then closing higher, because we already have the confirmation that we are bullish for this daily candle. What we can do is enter here. I was a bit late when I was doing the replay. So what we can target is you can look for some key levels here, but only looking for example, 3 to 1. So let's see what happened. Price is pushing higher without stopping. If you look for reversals here, most of the time you'll fail, and most of the time you keep looking for reversal, which is not gonna work for you. Okay, so it's gonna end up in a lot of losses. And now we're going lower, but we're still bullish. So you could always look for, now price I think came back to the opening price of the candle. You could have taken a long here, but now it's getting a bit weak, and we're coming into New York. So let's see what happened. Actually, where's the new candle open? We have a new candle opening around, yes, around here. So let's see what happened. So we're still continuing up. As I said, could have taken an entry here, just a bit of a retracement, and then going higher and breaking everything. So that was a huge trade. Another trade you could have taken is based on the same level that we were looking at. So price respecting the same level that we entered based on, and then pushing higher. So now a new candle, and what you're gonna do is do the same thing. Look for longs as long as the structure aligns with the higher time frame candle, and as long as we displace above the previous daily high in this case. If you notice, we go above, and that is a continuation to the upside. You don't look for reversals here unless it's aligned with a strong key level that will make you ignore the daily candle. Now, if we close bearish here, we can look for continuation, because now we've been bullish for 1, 2, 3 days. Now we could have some weakness and some reversals, and then you could trade the reversals, and then whenever you have another bullish candle closing up, okay, you could trade based on it again. So I'm curious to see what happened here. We're going lower. Okay, looks like we finally started going lower. Now for the next day, I could look for reversals going lower. But that's the lesson of always being aligned with the higher time frame candle. Now you could apply this to the weekly time frame and then to the monthly time frame. So if you notice, as we close bullish, then it was bullish, and it was bullish, it was bullish, bullish, and then we've taken the high, we were not able to displace, and then pushing lower, and here we took the low, and we actually traded based on this and this on its school, and this is all part of the candle continuity theory. There's more details on it, but I'm just showing you one side or one aspect of it, which is looking at the candle bias. Okay, now what happened here, as I said again, taking the high, not displacing, taking the low, not displacing, And there's sometimes where it's going to be ranging, especially after a long of candles going in one direction, a lot of candles going in one direction. One of the tips that I suggest is that whenever we go lower, 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 and then we close higher, then you want to trade the continuation. The highest probability is trading the continuation on the next one and the next one. After 3 consecutive candles, there's going to be weakness coming very soon. Okay, now it could last for 10 or 20 candles sometimes, but then based on probability, after 3 candles, and based on my backtesting, after 3 candles, it gets a bit weaker. Now you could also do this on the 15-minute time frame and 1 minute. If you notice, you can see a lot of times when we have 15-minute going up, then going down, it's prices following the same direction. And when you trade based on the 1 minute time frame, all you want is few pips, and that's going to result in a lot of reward to risk as well. Okay, so that's the end of the video. It's only based on looking at the higher time frame candle and then taking entries on that direction. If you learned something new, then make sure to share the video with your friends. I want this video to reach as much people as possible so they learn new things. Hitting the like button and then leave a comments, and then leaving comments. Make sure to check out my community. It's cool. That's where I trade with my members and I have all of the classes. That's it, and I'll see you next one. Bye bye.